Hello, welcome back to class. This is Taxation class Module 5, and we'll be talking about personal income tax. And you can see that we are beginning to pick each of those taxes one after the other, and we will look at them module by module. And for this module and this topic, personal income tax, we will look at the scope and chargeable income under the Personal Income Tax Act, look at relief, allowances, and exemptions. We also look at the PAYE system and self-assessment procedures. We will look at a number of computations, a few computations of accessible and chargeable income. And lastly, we look at the filing and payment procedure for individuals. And when we talk about personal income tax, it is a cornerstone of Nigerians' tax system, and it's also a primary source of revenue for state government, and it's designated to tax individuals according to their ability to pay. And it is both a tool for revenue mobilization and an instrument for promoting equity and social justice, ensuring that income earners contribute proportionately to national development. Personal income tax is a direct tax levied on an individual's total earning, including the wages, the salaries, and the income from business or investment. And when we talk about the scope, we are able to talk about who is taxable. And for that, we look at the governing law, as we said, is the Personal Income Tax Act. This is the governing law. And who is taxable? These are individuals, employees, sole proprietors, and the likes. And also have a partnership. We also have communities and families standing as an entity. We have trust and estates also who are taxable under the personal income tax. And the residency rule is that for resident individual, they are taxed on worldwide income, and for non-resident individuals, they are taxed only on Nigerian sourced income. And the key concept of Personal Income Tax Act is that it's a direct tax administered primarily by the state internal revenue services. And when we talk about chargeable income, it actually can be said in terms of accessible income and chargeable income. For accessible income, this is the gross or total income from all sources before any deduction. And we talk about the sources of this as salaries, business profits, rents, dividend, benefits in kind, and the likes. And looking at the chargeable income, this is the net income subject to tax after deducting reliefs and allowances or allowable expenses. And the formula for chargeable income is equal to accessible income minus relief, open bracket, relief plus allowances plus exemptions. We have those elements or concepts that are called reliefs, we have allowances, and we have exemptions that are to be deducted from the accessible income to be able to arrive at the chargeable income. And this is the amount the graduated tax rates are applied to. Looking at reliefs and allowances, they are actually means of reducing tax burdens. And when we talk about reliefs, these are deducted from accessible income, and they are personal relief, which is a fixed amount for every taxpayers. We also have the dependent relief, which deals with for children, aged parents, and we also have pension contributions, And then to approved scheme, we also have the National Housing Fund contributions, and lastly, the life assurance premiums. And we have allowances which are often provided by employer, and these include the transport allowance, and this is often exempt from the tax to be paid. And another is the housing allowance, and this may be partially exempt. And then we have the utility allowance, which is often taxable. And then the key point is that tax treatment varies, and you need to check the Personal Income Tax Act for exemptions. For the PAYE, which is pay as you earn system, uh, it's actually a mechanism where employers deduct tax at source from employee emoluments. And how is this working out? Employers calculate tax based on employees' earning and graduated rates, and they deduct it per month from the salary. And then it is being remitted to the tax authority within 21 days of the following month. And we have the responsibility of the employers, and the first is to register with the tax authority. Another is to deduct the correct tax. Another is to remit promptly and file monthly returns. And lastly, to issue annual tax clearance certificates to individuals. Looking at the self-assessment for self-employed, um, who is it for? Is this for? It's for the self-employed individuals, the partners, the professionals, those with investment incomes. And how does this work? How it works actually, taxpayers calculate their own total income for the year, and it's been deducted they deduct all allowable reliefs and expenses, and it applies the graduated tax rate to find the liability. And then the taxpayer files an annual return and pay the tax due. And talking about the filing deadline, it's actually the 31st March. It's the 31st March of the following year. And the key difference from the payee, the looking at the self-assessment and that of the payee, the responsibility for calculation and payment is on the taxpayer and not on a third party. Looking at the personal income tax attributed tax rate, presently, tentatively one has been brought out, which will take effect from 2026. And for present, we have, as you see on the screen, the tax system is progressive, and the rates for a year of assessment are applied as you've seen it on the screen. We have for the first year, we have 7%, we have 11%, 15%, 19%, 21%, and 24%. And for this, it is important to note that these are marginal tax rates, and each portion of income is taxed at its own rate. And looking at a scenario of Mr. Bello with a salary of 4.5 million, having a housing allowance of 1.2 with 50% tax exempt. Another is a transport allowance, which is 360,000 fully exempt, and utility allowance, which is 300,000 fully taxable. And in computing that, you see that the housing allowance is said to be 50% exempt, and that is the 50% of 1.2 is 600,000. And since transport allowance is exempted, then it has zero. And for utility, which is taxable, addition of the 600 plus 300 plus 4.5 gives a total accessible income of 5.4 million, 5.4 million. And calculating the relief and chargeable income now, for the relief case, in a situation where the pension contribution is 450,000 for Mr. Bello and life insurance premium is 200,000. The relief is actually 650,000, and for you to compute the chargeable income, it will be 5.4 million minus 650,000 naira, and that will give a chargeable income of 4.75. That's 4,750,000. And this is the amount we apply the tax rate to, just like we've seen, and this is how it's worked. After everything has been calculated, the total tax payable is 932,000, 932,000. And in filing payment and compliance, the filing deadline is 31st of December of the following year, and for payee employers handles deduction, and you will have to receive the tax clearance certificates. And for self-assessment, it's a must to file an annual return and pay the computed tax. And consequences of this is penalty and interest and late payment, filing legal actions and prosecutions for tax evasion. And you need to maintain accurate records of all income and relief throughout the year. It is very, very important to be able to get the the accurate tax to be paid. In conclusion, PIT is a progressive direct tax on the income of individuals and non-corporate entities. And chargeable income is the net figure after deducting relief from gross accessible income. And collection is via payee for employee and self-assessment for others. And accurate computation requires a step-by-step application of the graduated tax rate, and compliance is key to avoiding penalties.